Hello, everyone. A warm welcome to another installment of our weekly series dedicated to price action based technical analysis. In today's episode, we will be diving into the ever evolving landscape of the US oil market, where intriguing developments have occurred since our last analysis. In the upcoming week, two pivotal factors will likely be shaping the trajectory of oil markets. First and foremost is how much the conflict in the Middle East could escalate and its potential implication on supplies in the world's leading oil producing region. The second crucial factor lies in the anticipation of the Wednesday's update on US crude stockpiles, a report that promises significant insight into the market's direction. In today's video, I will be guiding you through my comprehensive analysis of the current market conditions for the US oil, and by utilizing essential tools such as trend lines, key levels, and chart patterns, I have conducted an in-depth examination to gain valuable insights into the historical price movement of these assets. And in fact, I am excited to share my findings with you as they reveal a straightforward yet promising setup for the upcoming week. But before we dive in, please remember that this video serves as an educational tool and not financial advice. My mission is to empower you with profound insight into the US oil chart and boost your proficiency in price action analysis. Remember, forex trading comes with inherent risk, so tread carefully and consider consulting a professional financial advisor before making any investment decisions. Without further ado, let's dive right into the business. So, as we transition into the 4-hour time frame, it becomes evident that the price action has indeed initiated a robust reversal setup. The seller's inability to break down that demand zone we identified at the $81 zone is technically a positive signal for buyers, indicating a potential shifts in the market sentiment, as you will be seeing here. So throughout the course of last week, despite this bearish momentum we witnessed since the beginning of this month, price is yet to break down that zone. In this analysis, we will be focusing on the price action observed since the start of the month. And if you look at this closely, you will see that since the month began, price had consistently found lower highs. And when we connected the series of lower highs here, we have this beautiful descending trend line to work with. And of course, you know how we use our descending trend lines in this community. If price remains below the descending trend line, we feel comfortable in a sell position. But if price breaches the trend line and breaks out of that structure, then we want to start considering buying. Now, if you look at what happened during the course of last week's trading session, we did saw price broke out of that trend line, as you will see here, before it went into a consolidation phase. And technically, we saw how price came back to retest the descending trend line, which is a very beautiful signal that price is likely going to the upside. And in fact, for those who are part of the Forex Morning Mastery, which I usually broadcast on my YouTube channel, we were lucky enough to be part of this position as we took advantage of that move. Now, in addition to that trend line, here is a key significant pattern here, which is a reversal pattern which comes in the form of a double bottom structure. Now, if you look at the impulsive move that started this month, we saw how price came back into the $81 area, tested it, and came back into the $85 level. and the inability of price to break down the previous low, that is finding a higher low in this market, is a sign that buyers are gradually gaining momentum behind the scenes. And of course, you know that whenever we spot a potential reversal pattern like this, the next thing we want to be doing is to mark out the neckline on the chart, which of course the breakout of that neckline will be validating the potency of that reversal pattern. And interestingly, we have a neckline for that pattern situated just along that psychological level at the $85 area, considering the round figure of that price. And look at what happened here on the last trading day of last week. We finally saw the breakout of that neckline, which further emphasize and validate this reversal setup. So in this case scenario, how do we intend to capitalize on more trading opportunities in this market? Well, for those of us who are part of the Forex Morning Mastery, we still have a buy position running at this point in time. However, for those who had missed out, well, I will be encouraging you to exercise patience at this juncture, as we will need to see some new setup to build up before we can join on this potential uptrend. So the question going into the new week is, how will this transition, how will price transition into the new setup? Well, one of the things I'm looking at here is a potential retracement, maybe at the beginning of the week, into either the neckline or the $83.15 level, where the appearance of buy pressure around the zone will present a beautiful opportunity to join the uptrend move. Now, there's another thing I would like to emphasize here, which is the $83.50 level, which also appears to be a neckline of another reversal pattern below this neckline here, and that's quite interesting. As you will see, we have another double bottom structure here where price broke out off. So I'm looking at a potential retracement into any of these levels, maybe the 85 or the $83.50, or even within that area, looking out for setups to join the uptrend move. So everything here is screaming bullish. However, if we are going to be considering selling the US oil spot this week, I would rather want to see price take out this demand zone, that is, take out all the buy positions here, to give me confidence of changing my bias from bullish to bearish. So to sell here, I would need price to take out all the buy positions, retest structures right below the $81 area to join the bearish move. So this is my view here on the US oil spot going into the new week. However, it is important to consider the impact of the ongoing war in the Middle East, which could favor the bullish potential in this market. With expectations of a potential restriction on oil supplies, there is a general anticipation that this could drive prices higher, further enhancing the bullish outlook. But trust me, I will be with you in the comment section at the beginning of the week, after monitoring how participants in the market will be reacting to the structure around this area during the early hours of the week, to give you an update on what I think will happen going forward. Well, I will be pausing this video until tomorrow morning. And if you found this content helpful and useful in making your independent trading decision for this week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find this material beneficial to them too. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content by subscribing. You would always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.